Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today we're here at the FIX EMEA trading conference and we've got one of the great speakers from the event, Roland Chai. Roland, how are you?
Very good. Thank you very much, Toby. It's a privilege to be here and talk to you at this great conference. It's been a very good turnout and very busy.
It's been a great turnout, hasn't it? I love this conference every single year. It brings together all the great people from the industry. And I think this year what I love about it is the agenda's been so varied. And we're going to talk about your panel a little bit in a short while. But before we do that, Roland, give us a bit of background about yourself and Nasdaq speaks for itself, right?
Sure.
But just give us the overview.
So I've been at Nasdaq for 6 years. And I've been running European markets. I'm head of the European markets, which is our exchanges in Denmark, Sweden, Finland, and the Baltics and Iceland. And so I've been running that for the last 2.5 years. And at the beginning of this year, took over also, in addition, digital assets for Nasdaq, both in the US and Europe. So it's a privilege, and it's been great fun looking at not just market structure as we have right now across equities, fixed income, commodities and post-trade, but also looking at primary listings, but also looking at the future, so tokenization, digital assets, and how we modernize market architecture and market structure going forward.
I love seeing digital assets move more and more into this world.
Yeah.
And we've seen it sort of happening at pace.
Yeah.
But to see someone like Nasdaq move into it really, I think, legitimizes the whole process. So we'll come on to that again in a short while. But let's talk about the panel. So you were there on the tokenization panel today. Again, the theme of the event being very much there about the era of change. Tell me a little bit about how the takeaways from the conversation. What are some of the things that you took from the panel? What are some of the messages that you want people who are watching that to be thinking about when they go back to their desks?
I think what was great about the panel is that I think everyone was focused on what's the value, what's the unlock. And there was what we've seen probably over the last 10 years is digital assets, great, shiny new toy, but what does that actually do? Whereas I think everyone was pretty much in broad agreement that tokenization and digital assets matter, where you can unlock utility out of it, either by increasing efficiency, solving complex trading and post-trade workflows, or unlocking liquidity and value in terms of capital efficiency. So some of the themes was collateral mobility and the ability to move collateral near real time, and then also being able to utilize that inventory on the balance sheet on a 24/7 cycle. So it is tokenization of digital assets is not about experimentation anymore, but it's about large-scale implementation on really specific value-added use cases for institutions.
I'm really pleased you said that, and I think it's really interesting because the digital assets debate hasn't been a fresh one to FIX over the last 5 years or so. And we've seen a sort of maturation of the subject over that sort of time. But it's a similar sort of thing to AI to an extent. AI has been a theme that's been coming for a couple of years. It started off as the data debate, and obviously it's been in the industry for a long time. It's at fever pitch at the moment where it's actually talking about proper implementation and use cases. To me, digital assets in the space seems to have been on a similar sort of journey where it was becoming more and more institutionalized over the last couple of years. It feels like it's arrived properly now, and having you speaking about it,
I think it's more advanced in the sense that I think you've had adoption on digital networks for a long time. So crypto's been around. A lot of these networks, but essentially they've grown up in a parallel to our deep and liquid capital markets that are there, whether it's in the US or Europe, where securities, equities, bonds are trading and interchanged. And I think now we're beginning to see institutions, whether it's financial institutions or asset managers, saying, okay, we're getting comfortable with this technology. There is huge potential there with programmable assets to unlock things such as collateral, mobility, liquidity, but also corporate actions processing, and a lot of the inefficiencies in our market today, and being able to deploy those solutions and start thinking seriously, okay, how do I move from experimentation to implementation? So I think that's that's been sort of the last 18 months of digital assets has accelerated in that fashion because we're out of the POC era and into actual scaled adoption, resiliency, and integration.
And you talk about your sort of journey, as you mentioned there, you've sort of grown in responsibility over that sort of time and adopted this sort of space. Coming from your background and taking this on, what are some of the learns that you've had in that?
Yeah, so I think, I come from post-trade background, so worked in...
Post-trade seems to really feel where it's landed.
And I think that's core to where we felt in Nasdaq. I mean, we run deeply liquid, very fast, low latency, ultra resilient markets in the US and in Europe.
Yeah.
And really, we're at 20 microseconds in latency, billions and billions of order messages dealing with all kinds of volatility. We don't see blockchain technology really improving that space because those markets are liquid and deeply efficient anyway. Where we do see it applying is really post-trade. It's sort of like, how do you, once you can get securities that are institutional grade on programmable digital assets that are mobile on a distributed ledger, then all sorts of possibilities unlock themselves in areas of collateral mobility, liquidity and financing, and then also corporate actions, proxy voting, and simplifying a lot of those things.
And if we look at Nasdaq, I mean, you've alluded to it a fair amount here already, but if you look at Nasdaq and its approach to digital assets and where it sort of sits there in the debate at the moment and what's happening with it all, tell us about some of the things that are exciting.
Yeah, so I think, look, Nasdaq's had a long history of being a disruptor. So when we moved to electronic markets, when Nasdaq started in the 70s, it was very much from going to humans to electronic markets. And I think we've always been looking at how do we evolve and transform the markets and modernize market infrastructure. And we don't just do that in the US and Europe, but we run 135 platforms around the world, marketplace technology. So we partner with a lot of people across Asia, Middle East, LATAM, Europe, about how to modernize their markets. So where we see it is very much evolution of the market to 23/5, which is what we'll do in the US and go live with, but the possibility of always-on markets. How do you deal with always-on as the demand, and some of it is retail, some of it is institutional, the demand from global access and have global liquidity solutions, how do you evolve into always-on environment, and then couples with how do you connect the new digital networks with the deep capital markets that are there. And I think what we see is also that the markets where we all operate in, highly regulated, investor protected markets with integrity, are a very good thing. Is how do you deliver that to digital networks and marry the promise of programmability, mobility, and the technology with incredibly resilient and industrial markets that we have.
Yeah, I think that's the interesting part of it.
Yeah.
When you talk about disruption in this sort of space, there's a natural desire to or a necessity for regulation and everything around it.
Yes.
And once you start to see those, and I think this has been the interesting thing about the digital assets movement is it needs that sort of anchor from the capital market space, which is why I think there's such a strong fit from what we talk about.
And that's a great point, because even as we move into digital markets and tokenization, we get the questions from regulators as the FMIs is, okay, so do the tokens, tokenize this, tokenize that, but how are you going to manage transparency? How are you going to do market surveillance? How are you going to do KYC? And so even though there's this innovation, everyone still wants that protection that our regulated markets afford.
So between rails, isn't it?
You don't throw the baby out with the bathwater. It's about how you deliver that to a always-on, 24/7, globally connected market.
Yeah. So look, this whole event today has had the sort of unofficial tagline of finance at the edge of change and such. And we are seeing enormous amount of change across the world, across this industry in particular. What are some of the things that excite you about that? Because I think sometimes we talk about a lot of doom and gloom in various stages of the industry. I think there's this massive opportunity out there with a collision of fairly seismic opportunities at the moment. Where do you sit in the whole thing?
Yeah, so I think Nasdaq is very much at the forefront of leading that and exploiting, leveraging those opportunities, because we constantly sitting there and say, what do the markets of the future look like? So how do we ensure that we can build on scale the liquidity that, whether it's the liquidity that we have in Sweden and our Nordic markets, how do we build upon that, and how do we build upon our deep liquidity in the US and bring more people and connect? So we see ourselves, and very much Nasdaq's USP or role is at the center of the fabric of those markets, and it's really working with our clients and customers, whether they're asset owners or financial institutions or issuers and public companies, about how can we make capital connect great companies in the innovation economy with great capital, and how do we help solve the risk management of collateral and capital in those markets. And that's core to what we do, because if you're not thinking forward and thinking ahead, you're not recognize what potential solutions you can deliver to your clients.
Yeah, and I think that's the key thing when you talk about solutions for clients. That sort of client-led, product-led.
It has to solve a problem.
100%.
So there has to be a real problem that the technology has to solve.
And I think that's been one of the big, learning points of this industry over the last few years. There's a lot of technology to solve problems that don't need to be solved at various different stages,
yes.
and a lot of technology-led founded businesses. And I think the ones who've really moved further forward are saying, right, let's really look at this. Let's be client-led. Let's listen to some of the issues and solve things through, because we've got this wonderful technology at the moment. Everyone's racing into trying to do something innovative within it, not always at the necessity of what needs to happen. But I think if you look fairly carefully, there's some really exciting things that can come through, and it feels like you're at the heart of it all.
Yes, no, thank you very much, Toby. It's really great to sit down and talk about it.
Likewise. Well, it's lovely to have met you.
Thank you
on the show.
It's a pleasure.
Thank you all for watching, and we'll see you soon on the next episode of FinTech Focus TV.